Have you heard the news of deflation in China? What has happened? Is this only a China issue? Is China exporting deflation to other countries? Why United States has to be worried, and what are the concerns for India? Hello everyone, welcome to iExam for 50% faster preparation. I am Chandraprakash Joshi. In this video we will talk about deflation in China. If you don't understand the concept of deflation, I am very sure that will look you very easy. Please subscribe to the channel. If you have any question, reach to us at 9205544028. Deflation is a global economic news. Second largest economy in the world after United States, China has witnessed fall in the inflation, and that has reached to a level of deflation. If you see China's inflation, that is definitely far lower than the peers, even after excluding food and energy prices. We exclude food and energy, but these are very volatile commodities. Consumer price fell 0.2% year on year in October data shows, and producer price fell 13th consecutive month, dropping 2.6% year on year against 2.7% decline forecasted by economists, and following 2.5% contraction. September price of livestock and meat fell 17.9% overall, driven by a 30.1% decline in the pork price. Non-food price was 0.7%. Posing a serious concern for the policymaker because China is the second largest economy. First, understand what is deflation. When prices of goods and services decrease significantly, it is not decline in the inflation. Inflation means prices are still increasing. Inflation is 10% means year on year 10% increase in the price. Last year the good which was costing you 1000 rupees, now it is going to cost you 1100 rupees. That is 10% inflation. But if the inflation goes down to say 5%, that is not deflation because there is still a price increase. But in case of deflation, there is a general price decrease. Please understand this concept very clearly. When there is a price decrease, you can buy more in the same salary. Value of money increases in this case. Is it good or bad? You may be thinking, yeah, I am happy because now I can buy more, but you must be wondering that this means things getting cheaper. Now you can buy more. It is not exactly like this. Let us understand. There are some positive effects. It makes goods cheaper. You can buy more. But the negative impact is that business have to produce at a lower cost. Otherwise, how they are going to make money? Any company, if the price of the car or the price of the oil is decreasing, how they will make money? They will get into losses. So they have to reduce the cost of production. When cost cutting happens, it often leads to job loss. If the company is reducing the cost of the production, so they will reduce the salary of the people and in their employee, and then maybe ask people to leave. Then these people don't have enough money to buy. Let us understand this in this vicious cycle. There is a lack of will to buy. People know prices are declining. I will buy later. If I want to plan, say, buying a mobile phone, and I know next month it may cost me lesser, I will rather wait for next month. That way, the inventory for the companies will pile up. There will be having more stock. And then companies will reduce the production because already they have inventory piled up, and this will result in the job losses. Now companies have enough inventory, sales is not happening, they will ask their people to leave. People leave. When people don't have job, they don't have salary, there will be lesser ability to buy, lesser willingness to buy. That creates then inability. Because of the deflation, there is lack of interest in buying, and now it is creating lack of ability to buy. When prices fall, people expect further price fall, they stop spending, expecting in future they can buy at a cheaper price, and that result into the loss of production, loss of jobs, and then loss of ability to buy. This is the vicious cycle. And in case of unemployment, country's economy will be severely hit and may crash in some cases. This is how dangerous deflation is. If you want to know more about distinction between deflation and inflation and disinflation, watch the KYC video given in the I button here. Understanding further the price decline goes into the circular flow of the economy. The reason for deflation is therefore decrease in the money supply. Government not injecting enough money into the market through investment or various government schemes and jobs. The ability to buy is lesser when there is lesser money supply. Usually it happens so if you have more money in your hands, people spend more. Decrease in demand because of the lack of the money supply creates deflation. Other reason for deflation is actually oversupply. That is when there is excessive production. Suppose there is excessive production of tomato. Tomato price will decline. Technological advancement could also lower production cost and that can increase the supply. Therefore, there are two reasons of deflation. One is demand side, another is supply side, like it happens in the case of inflation. So in essence, demand and supply are two important factors. If demand decreases, price fall, and supply increases, then also price fall. However, there are ways to manage this excess supply by exporting goods. But what will you do for creating demand? For creating demand, you have to increase money supply, and that is where the monetary policy plays a role. So what is happening in China particularly? Economic growth slowed down significantly in recent years since 2015. The Russia-Ukraine conflict is one important reason. Because of this, countries have put up numerous sanctions on Russia. As a result, this becomes difficult for China to trade with Russia, and value of Russian ruble has declined, more difficult to import from Russia, difficulty in paying debt to Chinese lenders, thus energy prices has increased globally. You must be observing even in India also we have faced challenges because of this. War disrupted supply chain led to higher price. So difficult for China to import energy and natural gas. In recent months, Israel-Palestine conflict has also created this disruption of supply chain about the crude oil. Then military assistance to Russia also led to the tension between China and the Western countries, who, especially America, who had been trying to impose more restrictions on China. Before that, it was the slowdown due to the COVID-19 pandemic. It started in Yuan. China was criticized a lot. China relied on export. It has impacted heavily. Production and supply chain was also disrupted, and so the consumer's spending declined in China. Then another important reason is the US-China trade war, which started during Donald Trump's presidency. US levied tariff, remember, $34 billion on Chinese imports. China retaliated with a tariff of $34 billion worth on US goods. That impacted both the economies, and it led to inflation, job losses, and uncertainty. China got affected more. Another important reason here is China's aging population. Working age population is shrinking, so less people are contributing to the economic growth. Reasons why China ended its one child policy on 1st January 2016 after 35 years of this policy. Chinese Communist Party allowed couples to have up to 3 children rather than 1. Another important reason is the price decline, particularly in the real estate sector. It signifies weak demand and oversupply impacting household wealth, presenting a significant portion of the family asset, falling price related spending. Existing home prices have witnessed on an average drop of nearly 18% since August 2021, further contributing to the consumers reluctant to buy. If you go to the history, Communist Party of the China encouraged people to invest in real estate for many years in 90s to create job and stimulate economy. As a result, there was significant oversupply. People were buying houses to make profits by reselling them. 2015, lending standard were tight. Interest rate increased. That put limit on the borrowing capacity. That cooled down the market. And all this made more difficult for people to buy houses further. That further declined the demand for the real estate. Then price fell because of the low demand and led to the inventory build-up and even loan default. Confidence was lost in the housing market. There were job losses. You need to understand that Communist Party of China cracked down on tech sector in early 2020. You must not be seeing Jack Ma nowadays. Even CCP was asserting its control on tech sector from becoming too powerful. Antitrust investigations were conducted, including ByteDance, Alibaba, Tencent. Investigations led to fines and penalties. Government imposed data regulations and censorship on data uses and content. Investment and innovation fell in tech sector and led to job losses. The repercussions of these deflations are some positive impact. The import become cheaper. When Chinese goods become cheaper due to the deflation, it could lead to the lower import cost for country like us, India, benefiting consumers and businesses that rely on Chinese import. It reduces input cost for the goods where we are importing from China. So reduced prices for raw materials and intermediate goods from China could lower production cost of Indian Indian industries that depend on these inputs. Third, it will improve the trade balances because Chinese deflation reduces the cost of production with the global supply chain, and Indian businesses integrated into these chain might experience cost saving. Therefore, Chinese imports can contribute to a more favorable trade balance in favor of the India by reducing the import bill. But the negative impacts are also there. That is, Chinese export due to deflation could increase competition for Indian exporters in the global market, potentially affecting some of Indian industries. Second, even electronic goods today, India and China are competing on manufacturing mobile phones. Second is import dumping. A flood of cheap Chinese goods into Indian market will affect our domestic producers. Our domestic industries may have to do job cuts, some may shut down. Then investment flows. A slowdown in the Chinese economy will cause deflation that may reduce investor confidence and affect foreign direct investment in India. Also, currency effect because China's central bank devalues its currency to boost the export in response to the deflation. China has done it over and over. It could lead to stronger Indian rupees, impacting India's export competitiveness. When India rupee becomes stronger, our export will become costlier. Commodity price reduce demand for commodities from China due to deflation that could lead to lower global commodity price, affecting Indian exporters of raw materials. Therefore, we cannot say Chinese deflation is not going to affect us. The consequences may be very, very serious. India need to be better prepared. For all such interesting conversations, please subscribe to the channel. All the best for your preparation. Only at Exam B, we help making your preparation 50% faster.